a market expert, and find out what to make of all these individual stocks, and particularly Infosys as well. Sandeep Shenoy of Anand Rathi now joins us. Hi Sandeep, after this 18%, do you think Infosys has adjusted itself, or do you see more pain ahead for the stock?
Well, we are of the opinion that adjustment may have happened for the current set of numbers and maybe the immediate expectations what is happening. But the point here we are trying to figure out, or maybe the market is trying to figure out, whether there is a structural impairment of the business model of a so-called strong company called Infosys. I think market is really grappling with that, and maybe it has been grappling with that for last 4 quarters. But there's no clear answer in sight, so it's going to be quite some time before Infosys could even come back to a semblance of its previous glory. So it's not going to jump up in a hurry unless at least 2 quarters of good results come, and I think that's going to be quite some time away.
Do you see it going down?
I guess expecting a jump up in a hurry. I was only wondering how much more deterioration in price can one see?
I don't think it's going to have too much of a deterioration here on Lada, because I think the large cap company with a high disclosure standard, the adjustment of whatever publicly available data happens in a span of minutes, and that's what generally efficient markets are about. So in case of companies like Infosys, the adjustments happen in a jiffy, and that has happened. But as you said, the point what I was trying to say, the structural impairment, I think market is still trying to grapple with it, and I don't think the current price movement probably convey that the structural impairment may also have got adjusted in today's price.
Actually, that is the point. Is this an impairment of Infosys' business model, or would you worry for the sector?
Well, I think let's face one aspect of this company. This is probably the bellwether, and of course is too rigid about its margins and certain other business aspects. But that has its positives and that has its negative, and I think we are bearing the negativity of that. But a company in transition generally has this kind of glitches which normally hit it at least a few quarters. But in case of Infosys, it may have gone for a slightly extended period. I don't think this is going to be a tick mark against the other bellwether, which is TCS. But then having said that, TCS is extremely richly valued, and its ability also to absorb any scope or any glitches in earning is also very, very low. But in case of any volatility in markets, is generally the bellwethers who are most susceptible. So in that case, probability may also be slowly getting loaded against TCS.
Sandeep, what will provide leadership in this market, particularly say as you look into FY14? IT was pegged, saying that that perhaps might provide leadership, but barring Infosys, just 2 stocks like an HCL Tech and TCS, and especially when TCS is so richly valued, is unlikely to provide that kind of leadership. So then what happens to the sector which where money can flow in and hold up in the markets?
Well, I think it's a good question, and I think that's what all analysts and all senior people are trying to figure out as to safeguard their capital in this kind of trying circumstances. Probably consumer, or maybe healthcare would be the set of stocks which could give you some kind of a safe haven in the days of volatility. But a mega cap like TCS would have been the most stabilization force in the market. Of course, by just sheer size and its ability to give some kind of a predictability in earning may help it to garner that status of a stabilizing factor on the market. But then I think that's just more on the hope front. But yes, I think you have raised a right point. It's going to be difficult for quite a few of these sectors to even provide semblance of stability, because it's a question of averages. After multiple quarters of good and predictable earning, it's a question of time before some unpredictability in their earnings also come in.
Okay, Sandeep, the industrial output numbers came in a tad better than expected, but I am a little thrown off by these numbers because the only positive number actually was capital goods. Anecdotal evidence doesn't support a 9.5% growth in capital goods. So clearly this is some lumpiness, some restocking. Every other number actually is showing has shown a contraction. Even a worse performance than the January numbers, which is not surprising. There is also a seasonal effect of February having lower working days. But what's your sense in terms of the corporate impact? Do you think 4th quarter will be the worst in terms of corporate earnings slowdown, or do you think there's more to come?
Well, I think, Lata, previously I had mentioned that, we have its expectation vis-a-vis delivery. I think we are moving towards Q4 where expectations are already lowered, and I think they have been ratcheted on quite a few times in the last 6-8 weeks. but the delivery could be slightly worse than that, on a lowered expectation, but delivery being slightly lower than that, and I think that's what market is grappling about. But going forth, Q1 of FY14, is it going to be anything surprising? I don't think so. But yes, the slide, the velocity of slide in corporate earnings may have come to end. We could see some flattening in next 2 quarters before any semblance of a uptrend comes, and I think that's what is really apparent now. But I belong to the slightly optimist category, where we say that the downslide, or the velocity of downslide in earning may have come to an end, but that doesn't mean that it's going to start rising in a hurry. We could be in for a flattishness at least for a couple of more quarters.
More lenders and creditors selling Kingfisher. So now Central Bank of India via sources is saying that they've got 16 crore via sale of Kingfisher Airlines shares. Well,
at the moment, markets, Sandeep, are still in a pessimistic mood. At the moment, 1.5% off for the Sensex and the Nifty. Okay, Nifty a little less at 1.15. The mid caps and the small caps are a tad better, 1/3%, and 0.5% knocked off those indices. Nifty Junior has surprisingly been holding out in the green at this point in time. Sandeep, you willingly have to take a call on liquidity because the market is being driven by it so much. What is the sense you are getting? Up until 2 days back, we almost thought that 5,200 is round the corner. Are you getting a sense that severe breaks are possible, breakdown in the market is possible, and that could be led by lack of global liquidity?
Well, I think multiple factors considering and factoring in. I probably would belong to the positive category of set of people where we feel 55 to 5600 is going to be a level which is going to hold on for the Nifty in the short term. I don't foresee a sharp breakdown to 5200 level, but then the market has a uncanny ability to prove everybody wrong, and for the first time I believe, and I probably hope that I'm not going to be wrong on that front. We feel that 5600 is going to hold on, but yes, it's going to be drudged from here at before some kind of a semblance of a uptrend comes.
Sandeep, just a last word. The other sector apart from IT, which is significant ownership as well as high valuation, is the entire consumer story. And in Q3, we had seen telltale signs of slowdown over there, particularly on the volume side for most of these consumer-related stocks. So how would you approach it then for Q4 as well as for FY14?
Well, I think consumer-facing stocks may have the only reason why people are latching onto them or piling onto them could be the predictability of earnings. The growth may come down, but then just because growth there is a sluggishness on the growth front, I don't think people are going to hit the exit button on them, for the simple reason they have free cash flows and they are predictable to a large extent. So the costliness in that fact, if you try to figure out the costliness in this sector, may become even even more accentuated. Yes, there could be sluggishness there, but I don't think people are going to exit them in a hurry because safety is going to be paramount for next few weeks.
Since you're mildly positive both on earnings as well as the markets, what would you latch on to, say, up until end of 2013? What would be the stocks or sectors that may perhaps outperform?
Well, I think the sectors which we feel are going to be on the positive side, or which could give you some kind of a saving grace in the entire turbulence ahead, is definitely consumer, healthcare and IT. And okay, one swallow doesn't make a summer, so Infosys may not be a glitch on that. But the ones where we are positively, these are the positive about, and the other ones where we feel the negativity is going to abound is to some extent metals, materials and energy. Rest of the sectors we are neutral about.
All right, we'll leave it at that. Sandeep Shenoy, I appreciate you taking time out for us. Thank you very much for joining us today.